Good evening, everyone. We are Nicolas, Alejandro, Micaela, Facundo, and Alejandro, and we are here to present our Valuation Central Puerto, an electric generation company in Argentina. We issue a buy recommendation, and through our evaluation, we arrived to a 1-year target price of $5.26, offering a 30% upside to the closing price of December 10th. We issue this buy recommendation based on the following 3 pillars: Argentinian equity sell-off, leading operating metrics, and future outlook. For the first pillar, Central Puerto is a strong company with experienced management, solid know-how, high-quality assets, among other competitive advantages. But after Argentine's primary elections, Argentine equity suffered a sell-off, dropping CEPU stock 55%. The market is discounting 2,000 basic points, but we expect a rebound in Central Puerto price stock. For the second pillar, Central Puerto's asset availability ratio is higher than the market average, and the thermal heat rate ratio is lower than the market average, showing the company's efficient operating metrics. For the last and third pillar, Central Puerto for the next year, installed capacity is expected to grow by 15%, composed by a growth in 18% thermal generation and 86% in renewable generation.
I would like to give you an overview of the energy power sector in Argentina. The wholesale electric market is managed by CAMESA. The price paid by CAMESA is regulated under Resolution 119, known as Energía Base, and it accounts for 86% of CEPU's revenues, limiting the bargaining power of the company over buyers. Generators can choose whether to purchase their own fuel or obtain it from CAMESA. Therefore, we consider the bargaining power of suppliers is low. The heavy regulations and capital intensiveness of this industry pose considerable barriers for new entrants. As of now, CEPU represents 18% of the private generation market, and our view is that this tendency will continue, allowing the company to sustain a strong footprint in this sector. As everyone knows, every investment decision involves risks. That's why we conducted an exhaustive analysis of the potential risks that could affect Central Puerto's performance. The main risks are the following. Firstly, there's a high probability that the new government will specify and fix energy and power tariffs. However, we forecasted a favorable evolution of the real exchange rate. Secondly, it is likely that exchange controls and restrictions on capital inflows and outflows will continue, potentially affecting the company's capex plans. However, upon sayings of Alejandro Fernández during the last days, his government is willing to boost renewable energies by establishing a different and more flexible framework to this clean type of energy. In third place, the non-renewal of Hidroeléctrica Piedra del Aila concession, which expires on December 2023. The company's management, however, is quite confident about this renewal based on the strong performance this facility has.
Now, turning to our valuation model, we conducted both a discounted cash flow valuation and a relative valuation, and the assigned weights were 80% and 20% respectively. But now I would like to focus on the spinal cord of our DCF model, revenues. Central Puerto's most common compensation program is comprised of payments received on actual dispatch power, as well as monthly payments received from CAMESA on available installed capacity. Central Puerto operates mainly across 4 different compensation programs, each with its own specific revenue schedule. But even though these 4 contracts are different, they have one thing in common. The price paid for energy is set in US dollars, and we believe this is bound to change under the new administration. And of course, this might seem like an immediate red flag, but there are 2 sides to every coin, and we believe this is actually a medium-term revenue enhancement. The key lies in the evolution of the real exchange rate. As a basic scenario, we suppose that all tariffs except for renewable energy will be specified in 2020 and fixed for the term of 1 year. And all of this is expected to happen in a high inflation scenario. But after the initial transition hit, we expect the tariffs to be adjusted according to the inflation rate, which we estimate will be over the devaluation rate, hence boosting revenue in US dollars as a consequence of the appreciation of the peso in real terms. And another important point to consider is that in this sector, organic growth can be achieved by 2 ways, either by acquiring new projects from the government or by increasing efficiency. But unfortunately, due to the current economic situation, we do not forecast the acquisition of further new projects other than the ones which are currently being built.
We can divide the capital expenditures into 2 parts. On the one hand, we expect expansionary capex to account for $200 million during 2020. This investment aims to finish the construction of the facilities currently being built and to achieve efficiency gains by closing the remaining open cycle plants. On the other hand, the maintenance capex will cover the annual depreciations and amortizations we have previously stated. Regarding working capital, we expect its value to increase during 2020, mainly due to the impact of Argentina's recession and Camesa's need of both collecting their receivables rather sooner and delaying on payments and fuel provision towards Central Puerto. In order to compute the terminal growth rate, we calculated the average growth rate of Argentina's GDP measured in constant US dollars for the last 60 years. We decided to be conservative and thus use this average of 2% as our terminal growth rate. At the time of performing the DCF valuation, we conducted a multi-WACC approach, which means that we are discounting the cash flows for the next 5 years at one rate, and from the last forecasted year onwards, we are discounting them at a different rate. As of today, as many of you may know, Argentina's country risk premium is in historically high levels due to political uncertainty and economic turmoil. Hence, the rate at which we are discounting the cash flows for the next 5 years is indeed quite high. However, we have assumed that for a period beyond the forecasted horizon, the economic turmoil will in fact dissipate and Argentina's country risk premium will be significantly lower, reaching its average for the last 15 years. Thus, we are discounting the cash flows that belong to a terminal value at a much lower and stable rate.
As we know, there are thousands of electric power generators all over the world. How did we build the pure sample and make our rate evaluation? Simple. We were very careful in select power competitors. In order to this, we select specific companies power companies to compare with the worldwide peers, included in the major stock exchange. We assumed that the best way to face our relative evaluation was to assemble a robust sample of companies dedicated solely to electricity production and leaving aside companies with projects involved in oil and gas, related to oil and gas. This methodology filters by revenue streams and use of natural gas. Other thing, it is very important to know that the operating installed capacity, Central Puerto has an advantage in this, since the 66% of this installed capacity it's operating with natural gas. The other sample does not reflect this, and it has a 44% in a peers mean. Our sample reflects the market view, since Central Puerto, our sample reflects our weighted sample reflects our weighted sample represents the market view. With this, Central Puerto use the performance metrics for financial performance too, and also we could extract the betas applied to our DCF valuation to make our a stable sensitivity analysis. Finally, for all these reasons, all my partners mentioned, we see Central Puerto as a company with growth, capacity, competitive position, and we issue a buy recommendation. Thank you all. We can continue to the questions.
First, congratulations for the presentation. I'd like to put some emphasis on the projections that you made on the real exchange rate in the fact that probably the company you're saying that would be better off being linked to pesos instead of dollars. And I'm a little shocked about that. I believe that the company has this tariff environment or schemes that are related to dollars because probably the marginal cost of producing that energy is related to dollars. So at the end, the main incentive of the companies will be always to be dollar linked to the revenues generated by Gamesa. So can you go deeper on that? Have you ever, did you do any stress test trying to understand if the situation going forward is going to be more similar to what happened 18 years ago in Argentina, 2002, 2003, when we have a classification of the company that was consistent over the time for almost 10 years, and the dollar value of the energy generation of the company was worthless, and the companies were really affected by that, because it seems like inconsistent from the fact that now the company seems to be more biased to be linked to pesos instead of dollars. So can you go deeper on that? Because I think that's on the core of the valuation of the company.
Yes, of course. We have three axes in this part. For the inflation part, we used the IMF projections, and for the real exchange rate, we took the historical sample and we calculated the geometric average, yearly geometric average change from 2002 up until 2019. We are now at a point where the real exchange rate has gone up significantly. So we see that taking this as a historical evolution, it is very likely to continue that way. So with keeping this in mind, we think that that is the most likely scenario. And talking about stress tests, we comprised a better scenario in which the tariffs were fixed for 2 years. In this case, when you see specification, the most damaging thing is to be fixed in pesos. But if your tariff is linked to the inflation, then with our calculus, that shouldn't be a problem, at least in the first place.
That's a very good scenario.
Yes.
They are fixed for 2 years, and
then it's going to
be the impact on company.
So this, besides from the bearish scenario, there's no change in the real exchange rate between, of the Argentinian peso against the US dollar. So that's, as Facundo said, the spinal cord of our valuation. The fact that we expect tariffs adjusted to the inflation rate, and with an inflation rate larger than the devaluation rate, having a real exchange rate appreciated.
And what's the weight of that scenario in your models?
Okay, in our models, initially, we weighted 100% to the base scenario, and there we got to the valuation of, to the price target of $5.26. Nevertheless, we calculated a scenario, a weighting of bullish 25%, bearish 25%, and base scenario 50%, and the price target is $5.32. So it's pretty much the same price target when we add different weights to these two scenarios.
Could you please elaborate a little more on the cost of debt that you use? I saw that when you showed the WACC calculation, it was 14%. Based on what is that? And also, if you could please elaborate a bit more on the debt situation of the company, and if all the macroeconomic variables and things that you mentioned at the beginning would impact the capacity of the company to pay this debt.
The first step to build the cost of debt was seeing the Argentine corporate debt curve, and since our valuation is focused in mainstream the first 5 years, we took YPF, the most liquid corporate bond, to take as equity, the cost of equity. So we took the yield, it's currently 14%. And
well, yeah, regarding what you mentioned about the position of leverage of the company, all of the projects that are currently undergoing for Central Puerto are already funded. So, and the leverage ratio, the debt over the assets, is of 34% as of right now. So we really don't see any problems there. Besides, All the projects they are currently undergoing are financed whether with equity or with borrowings already established by banks like KfW, perhaps Morgan Stanley, IFC, IAC for projects such as renewables ones that are currently being built.
And what is the rated cost of debt of the company right now with those loans that you mentioned?
Is of 36% right now, but for our valuation we chose a debt to asset target based on the average we saw in the comparables we decided to study for this valuation. This 53.92% is our target capital structure based on the average of the comparables. We see there's room for leverage.
Can you explain a little more about the revenue projection and the rate you use for the revenue?
Yes. As we mentioned in the base scenario, we get specified in 2020. The tariffs are fixed for 1 year, and after that, they are going to be.
Okay, but I'm talking about the composition of the revenue. You talk about renewable energy
Yes.
as a different from the other kind of energy. You can explain a little more about that composition in the revenue.
Sure. Revenues as a percentage of the total revenue are small. They're going to grow, but within this company, they are a small percentage, and they're highly efficient, so that is quite beneficial for the company. But the strong core of the revenue is set in thermal energy. So we forecasted using the historical availability rate for each plant. We forecasted projecting the same energy output, but the change was in tariffs, the price of tariffs.
Regarding what you were mentioning about remuneration scheme, almost all the projects that are currently undergoing are regarding the renewables. This is based not only on the profitability of each of these programs, but also on the measures of the government that aim towards developing this industry. In fact, it's a government policy that by 2025, 20% of the energy matrix is based on renewable sources. Nevertheless, there are also facilities being. Sorry, may I take a second? Apart from the renewables ones, the main generation sources for Central Puerto are, as Facundo said, thermoelectrical and besides hydroelectrical. And we foresee that there may be some upgrades on thermoelectrical plants, such as, for example, Brigadier Lopez, which is likely to undergo with a closing of the cycle, which increases the generation of energy. So,
for the revenues by remuneration scheme for the 2020, we're projecting 22% from PPA, 3% from matter, and the rest for energía base.
The worst case scenario of specification and fixing of energía base for the company, do you think that there's a possibility of having a credit event in the next 2 years? I believe that the debt is denominated in dollars. That's the case. So do you think there's a scenario where the company could be exposed to having a credit event in the next 2 years if the government decides to go for a specification of the energía base, which is probably what's going to happen in the next 2 years? Do you think there's a probable scenario?
The theoretical answer would be yes, it's probable, but taking into account the current economic situation and the political component, we notice that energy is a major input into the policy machine. So the new government will need energy to be available, and also we think that there's going to be a program that covers financing, because Central Puerto, as all of the other energy producers, are key components to the industry and to the consumption, which is something that the new administration has said wants to boost. So we believe that even though we are going to transition some turmoil and some changes, the debt servicing will be covered, at least by help of the government.
Time's up.